Fight Commander. Jared, it's good to speak with you today and have you on the show. I do want to start with Shift4 and specifically the fact that you did have this strong guide for the new year. Do you see the economy slowing right now, especially given the fact that you do have this read on hotels and casinos and restaurants and concerts and other things that are very discretionary in terms of spending?
Yeah, good question, Morgan. Thanks for having me back on. I think our guide is much more about our confidence to continue to win share across all the verticals that we're in right now, which is restaurants, hotels, travel, leisure, not to mention we're expanding internationally. In fact, I mean, at the low end of our guide, which still represents 40% year-over-year volume growth, we actually said that takes into account a possible mild recession. Now, from all the data that we're seeing, things are still good. Consumers are still healthy. They're going out and spending. But we put out guidance that, kind of covered a range of possibilities from mild recession to business as usual.
Talk to me about this partnership with PayPal and how it speaks to the way you are expanding into the payments universe in an even bigger way and how that is driving growth.
For sure. So throughout our, 24-year history, you would find Shift4 in restaurants, hotels, stadiums, basically a lot of in-person experiences where you actually don't see a lot of PayPal. You don't see a lot of alternative payment methods. But over the last year and a half, we've moved into travel and leisure, gaming, what we call sexy tech, supporting some really incredible e-commerce customers that are expanding all over the world. And when you move into the card not present arena, then you're going to want to partner up with some of the best in terms of alternative payments. PayPal is certainly one. But as we continue to move into new markets, whether it's Europe, Central and South America, Asia Pacific, you're going to hear all sorts of additional alternative payment methods that we're going to be making available to our customers.
You just mentioned Europe, international expansion, certainly a big focus for the company and for driving that growth moving forward. How much does the Finaro acquisition being approved and closing hinge on that story?
Yeah, Finaro is one piece of the puzzle. A lot of our success where we're at today, delivering year-over-year growth for 24 years is being ahead of the game when it came to integrated payments, which was the convergence of commerce-enabling software and payments. It's what made us a leader in so many different verticals we're in. Well, the next evolution of that is the 3.0 of integrated payments is being able to do it all over the world. And that Europe is certainly part of that. Finaro is a key platform capability that's allowing us to really serve every country in the EU, plus Israel, plus parts of Eastern Europe, plus Hong Kong. But this is just one piece of the puzzle. We're organically expanding into Canada, the Caribbean. We're looking at inorganic opportunities that will take us into other continents as well. So we're really focused on getting the critical mass, which is having rails that connect commerce pretty much all over the world. Finaro is just one really important part of that story.
So, of course, I'm going to shift gears here, and I'm going to ask you about space, especially since we got Virgin Galactic results just a few moments ago. Your thoughts on this, for lack of a better term, commercial space race in this moment we're in, especially as Virgin Galactic, which is focused on suborbital space tourism, is looking to launch its service finally this year. Are we at a moment where this is finally becoming more mainstream?
Well, look, as a space enthusiast, I want to see investments across the spectrum. Having been in orbit for a couple of days, I'm excited about the possibilities of what exists, in low Earth orbit and beyond. It's pretty exciting. Maybe new forms of energy source. There will be a space economy. But I think you're also going to have this pretty big pendulum swing. In 2021, you had a lot of space-related companies that did SPAC transactions, a huge influx of capital during a zero interest rate environment where, risk-taking was encouraged. That swung another way. When you've got Treasury at 5%, it's really hard to make some truly moonshot bets on some of these. So I think there will be a little bit of a correction there. Hopefully, some of the technology that's developed by some of these companies can make their way into new and exciting companies. But the landscape's going to thin out, and frankly, I think it's going to come down to a couple launch providers that can put payloads, satellites, and human beings into orbit. I think that's really where the opportunity lives.